Shahina Mukadam is now joining us this afternoon. Shahina, good afternoon. What do you make of the recent recovery in the market? Do you think suddenly markets have changed? Suddenly there has become a risk-on trade in the market?
Well, I think there is a risk on trade going on, but basically, the expectations even from today's ECB, the European policy is expected to be pretty benign. And I think there is money, of FI money that is likely to continue to come into Indian markets, which is, I think, what is supporting the markets. Because we are seeing some selling coming in from the domestic institutions, but I think it is being absorbed by FI inflows. So I think it is positive, and as long as we stay above the 7,400, there doesn't seem to be too much of negative sentiment.
Right, but would you be a buyer after such a sharp rally, or you would wait for a little bit of correction to get in now, at least on an aggressive way?
Well, aggressive way, definitely, since we're in a consolidation phase, see, not to forget, we've had this huge, big, sharp rally before we saw this correction set in, just last 2 days.
Right.
So I think to be really an aggressive buyer, I would say wait for another 50 odd points when we get some good, strong technical signals that, we are in for another 200-point up move. We are at levels where, 100-point one way or the other can really move the markets 200 points further. So we are at a cusp. So I would be a bit cautious if I'm trading.
Right. What's your view as far as mid-cap and small-cap is concerned? You pointed the fact that DIs are selling in the market, but still, we are not getting a sense that there is any forced selling, as in, if the prices are good, if there is buyer, then there is some selling. It's not that they are coming out and selling irrespective of the price. You think that that is essentially good, so they can take their call, there is no hurry to sell. If they are not selling today, they may come out in the future. When there is a lot of buying, they may be selling?
Yeah, no, absolutely. Actually, you're absolutely right. The DIs are just booking profits, in areas in where they were buyers when the market was down, that we saw they were putting in money, where the FIs were sellers. So now I think it's reversed a bit, but I think they're basically just booking profits. It's not like nobody is really taking a negative view on the overall market. And I think mid caps, I think there is always scope to get into mid caps, especially with the correction that we have seen in large number of mid caps. There is always scope, given the fact that there is an expectation that interest rates will come down. There is an expectation that the economy will pick up, that GST will come in over the next 1 odd year. So there is selective buying that's always possible at current levels.
Right. What is your view as far as ECB is concerned? You think it will be a binary event for the markets?
Well, I think it will be marginally positive, given the fact that it is expected to be benign. So now we'll really have to wait and see. But I don't think it's going to at all be a negative.
Right, but why do you say that it cannot be negative? That's in the December one, the November one, they are disappointed in a big way. Do you see that coming again?
No, I don't think so, because even if you see the way the Fed policy is evolving, there also I think any interest rate hike can always really put back. So I think no, I don't think there's going to be anything negative today.
Right. So you think markets will just read into it? They will be in line and essentially move ahead?
Yeah, I think so. Tomorrow being a Friday, I think we may not really see any movement either ways. But I do think that if we are able to sustain this move and maybe cross the 7,550 levels, maybe we could see an up move. At the same time, if we move down below 2,400 tomorrow, 7,400 tomorrow, then it is another 150-point lower. So as I said, we are at that cusp. But I don't see any major moves. Like we are sort of stabilizing in a consolidation phase.
Right. What would you go ahead and take as far as the overall commodity prices are concerned? Commodity prices have started to spike a little bit, and that has come in as a relief. You think it was needed? The street was factoring in a lot of defaults coming in, which may not be as bad as the street had predicted in the month of Jan.
Yeah, but if I want to play that segment, I still would prefer private sector banks like say an ICICI Bank or an SBI.
No, I'm not talking particularly about names or stocks. I'm just saying that the commodity prices, markets were being correlated with it, exactly the way they were going down. Now they are going up, markets are also going up. You think it comes in as a relief that commodity prices have been decently off their lows?
Yeah, I think there is, yes, that's true. And there is a nice short covering bounce. Maybe something like an aluminium and Hindalco. And also this, if you combine it it with the policies that we saw today, wherein transfer of mines is being allowed. So there also it's a positive, like for example, for steel companies also, and cement also, if you're looking at cement as a commodity. So I think to an extent this is providing support. Also, I think the MIP that the government put was a good positive for Tata Steel, which is an important player in the contributor in the overall segment mover. So I think Hindalco and Tata Steel, if these two move, and Jindal Power and Steel, so I think these stocks together really account for a major chunk, which I think they're positives in all of
Still, you
them.
think private sector banks would have the risk of this default coming in from any of these large cap players?
Well, see, it is there, and we are seeing, if you see the provisions that ICICI Bank made in the last quarter, it was up by 200%, and if you see gross NPAs at 5%, I mean, these are record highs that we've not really seen for private sector banks. Even HDFC Bank, where we never really thought of NPAs ever, so there also, there's a slight deterioration. So to that extent, yeah, but I think their exposure to the power sector and steel sector, the government is bringing in policies to enable these companies these banks to sort of tide over them. And if you look at valuations, if you look at the recovery that they have made from their lows, I think these are the, like just say for example ICICI Bank and SBI being in the PSU space, these are the stocks that seem to be able to give you the 30-40% return, like from say a 200 ICICI Bank to say 215 now. I can visualize a price of somewhere close to 275, 280 a year and a half down. Similarly for SBI. So I mean, if I'm really looking at good performance over the next 1 to 2 years, these are beaten down spaces which do offer entry points at current levels.
Right, but again, the risk is also there. I mean, you have to be a high-risk profile investor to go into these names, right?
Well, yeah, risk is there, but if you see risk reward, if you see the risk, like for an ICICI Bank, yeah, you can see a 25-30 rupees downside from here, okay, which could be the worst case, and which is possible because of the numbers that they'll probably report in the fourth quarter. Similarly, for State Bank, we've seen very strong support about 150, 155. So they're not too far from their very strong bottoms, and I think when you look at the upside and you start looking at various alternatives across the market, then they start to look attractive basically on the risk return ratio rather than simple quarter profit. Of course it's going to be a problem. Non-performing assets is going to continue to be a problem in this quarter and maybe for the next one odd quarter going forward because of RBI change in policy.
Right, but you think markets has already factored in a lot of it?
I think so.
Right,
Yes.
so there, say once the Q4 is behind and people would start to look at the fresh books and most of the provisions are done for. You think there could be a positive surprise with some upgrades coming in the next 3-4 quarters, or maybe say in the next 6 quarters? That could be a big positive delta for any of these large cap banking names.
I think it's already starting to come in. If you heard the very negative tone after the last quarter numbers, it's starting to peter out. So I think it will just be a matter of time before we start seeing upgrades in these banks. I'm not talking of the smaller PSU banks, which really still are going through major pain, and that could take a slightly longer term period before those banks actually really show you a major recovery.
Right. The high risk trade would be the real metal names like Vedanta, Tata Steel. They continue to be high risk irrespective of prices of their underlying commodity seeing slight bit of uptick.
I think so. I mean, Tata Steel, I think, there are positives, and we've seen the stock really giving you a good return in the last couple of months. But I would think that at around 300, 315, it's likely to again hit, resistance. And because, see, the main issue is not being sorted out here. Yeah, you have certain protection coming in for prices, but one is that again from, say, 68, 69 rupees of the dollar, we are again seeing it coming back towards the 67. That is one. Second, the problem in China and the demand and the slowdown in the global economy continues. So there is going to be a pressure on overall all commodities, and I would say steel, ferrous being one of them.
Right. What do you essentially make of something like say a Maruti? It's gone from the levels of 4,800 to about 3,600. We still are not seeing any major data coming in on the PV side or the PV growth side, but still you think the correction factors in a little bit of disappointment coming in the next few months?
I think it factors in a lot. Having said that, I think, yeah, it is possible that the stock, if the market were to slip back to the 6,800 types, it could go down to 3,250 type of levels, which is another, say, 300 points down from here. But I think this is a very good opportunity. See, a lot of negative factors came together for Maruti for this correction to happen. One is, Haryana, that the production loss because of Haryana, they lost almost 10,000 vehicles production. And if you see the overall growth for the month, it was just 1%. Exports were down 12%. Then the budget, the government has introduced the cess. So all these factors put together resulted in this correction.
Right.
So I think it's offering good value for a long-term investor. 4,000, 4,100 is a 6-month target for me.
Right. We had earlier suggested to buy Ashok Leyland. Of course, that has weathered the storm of this last 2 months. It's around the 52-week high. Should one shift from Ashok Leyland to Maruti if somebody was holding on?
No, I personally hold Ashok Leyland. So I'm an interested party in a small sense, very tiny sense. But at the same time, I think Ashok Leyland, though the valuation of Ashok Leyland is much higher than Maruti, but I think the delta in terms of actual number of sales, the balance sheet change, the P&L change, the volume change for Ashok Leyland is much higher than Maruti. So if I were to pick between the two, I would still stick with Ashok Leyland, which was a turnaround stock, has turned around in the last 1 year, and I still think there's some way to go from here. So yeah, if I was to pick, these would still continue to be buys.
Right. What do you make of Crompton Greaves? There has been a lot of corporate action over there on Monday or Tuesday. Sorry, it will get demerged and adjusted for the pricing as well.
See, I think the business that is left now, the domestic business largely, which includes both the consumer as well as T&D business, could be valued around at 170 rupees at max. Okay, so yes, there is another 10 rupees upside from here. So I wouldn't be a seller right now in the stock. I still think there's an upside because the positives that will come out by the sale of this T&D asset, international business, will start reflecting into numbers in the next year, and that will mean they will show a good growth. Now they are not really reflecting a good growth. They'll start showing higher single-digit growth in their domestic business. Also, their margins will improve because the loss-making business has been sold out, and debt will come down. So I think the overall structure of the company will start looking much healthier. And with the power sector coming in, transmission doing better as an overall sector, I think it would be a stock to stay in. Maybe we could see higher levels if one was patient and continue holding on. But I think a consolidation for next 6 months would be in the about 160, 170.
Right, exactly the point that you're making. After a point of time, you would start to look at sum of parts. That the consumer business is this much, power business is this much, and that's why maybe 170 is the upside. That's what you're trying to say.
Yeah.
Right,
yeah.
And once the consumer business gets listed again, that's in the month of April when it is targeted. You think that will be an important event? What pricing people give there would be important?
I think it's already a separate company as of now.
No, but it's going to get demerged and then going to get listed. So I'm saying the pricing of that, the multiple that Crompton consumer gets, will be important for this entire sum of part valuations, because that's the real delta.
I mean, that could be one, but I think the two things combined give you that sort of value. So yeah, that could be a delta, but really that is in the realm of we need to see how that business does by itself and what sort of buyer comes in for it. So that is not something one can really factor into what sort of valuation they'll get.
Right, Shahina, thank you so much for taking out time for us. Always a pleasure.